This is very simple strategy. Anybody on this call can use it to flip an account. This call is recorded, and I'm going to share the recording with you all. For some of you that came late, you can rewatch it at your convenient time. So this is just another example, and you can see that the $50 has gone from 50 to 128 just with two setups. Now you have 128, you have more equity. That means if you're taking such trades, you'll be making more money, and it will be easy for you to flip it from 128 to around 256 or something. So let's go to another pair. Let's have a look at gold, for example. So I'll use a different chart so I can clear the charts. So right here we have gold. Remember the first thing I said, before you trade any pair, make sure that pair is a trending pair. If it's not trending, there's a very high chance you're going to blow the account before you even flip anything. And right here on gold, if you go to the monthly, you can see it's very clear that this is bullish, consistently trending to the upside. Now you can see that it's trending to the upside. All you're looking for is point of interest where you want to buy. An example right here, we have this fair value gap right here. You mark the fair value gap, the weekly fair value gap. That means if you're looking for a trade idea using the weekly fair value gap, you can let the trade run. The trade can run to like a 1:3, 1:5. The next thing, you go to the daily, you want to align the time frame. This is a daily fair value gap aligning with the weekly fair value gap. Now, we want to get a smaller stop loss. We want to have a very high risk to reward ratio so we can easily flip that account. Right here is a daily fair value gap. We align it with a 4-hour fair value gap. And right here, we have a 4-hour fair value gap resting right inside a daily fair value gap. So what that means is instead of us using a 1-hour break of structure or 30 minutes break of structure, we can actually use a 15 minutes break of structure. Now, the last but not the least thing I'll do is to go to 1 hour to see if I can align that 1-hour fair value gap to a 4-hour daily and weekly fair value gap. And here you can have it that the market also has a 1-hour fair value gap resting at that position. So I can equally use a 5 minutes break of structure to get into this trade in order to minimize my risk and maximize my reward. So price coming down in here, all I'm looking for is a 5 minutes break of structure to the upside. And right here, you can see how the market was trending to the downside on 5 minutes time frame, creating all these lower highs and lower lows. And right here, after creating a lower high, it dropped to the downside and then it broke structure right here. The moment you see this break of structure, you're looking for an entry right there. First entry, you put it in right there. Now you're risking 10% again. 10% of 128 is $12.8. So let's just say you're risking $12 in here for your first entry. Remember, our first time frame we use to derive the point of interest is the weekly. So we can actually let this trade run for at least a 1:5 or 1:6. So in this case, let's just take it out at 1:5 for our first entry. And we can also look for another multiple entries as well. We can scale down to the lower time frame, like the 2 minutes time frame, to also look for lower time frame entries. So we can have multiple entries and higher risk to reward. And right here, you can see that on the 3 minutes time frame. So let's go to 2 minutes. Let's see if this will let us go to 2 minutes. So on 2 minutes time frame, you can see that this market was trending to the downside, creating lower highs, lower lows, a lower high, and then right here created a lower low. The moment it broke structure above that 2 minutes high, I'm looking for another entry right there. I'm literally just going to market execute above that high, and I'm going to use the low right here. I'll use this low as my stop loss, and I'll just add a few pips extra just due to slippage or spread. And in this case, I'll be targeting the same area. Both trades will have the same take profit position. And you can see that the 2 minutes entry is literally, I'm anticipating for a 1:7. And the other one, the first entry using the 5 minutes, I'm anticipating for a 1:5. Now, both trades, you can already see that both trades actually played out and price rallied to the take profit. And these two already risking $12 for each of them. This one would deliver $60. 12 times 5 is 60. And this other one, 12 times 7, would deliver around 84, if I'm not mistaken. So that's around 60 plus 84 is around 144, if I'm not mistaken. Quote me wrong if I'm wrong. So should be around 144 from just these two trades. So these two trades already flipped the account from 128, you've made an extra $144 profit. So you've gone from $128 plus 144. And this is you trading with just a $50 account. Your $50 account has gone from $50, and now you have 128 plus 144 should be around 200 and can someone help me with the calculator or something?
68.
72.
268.
Yeah.
All right, perfect. So now your $50 has gone
272.
270. So
272.
Yes.
272. Yeah, I think 272 should be right. So your $50 now has gone from $50 to $272 just from 3 setups.